floor of the CME Group in wonderful Chicago, Illinois, the strongest city in the world. I am Mark Sebastian, Chief Operating Officer of OptionPit.com and author of The Option Trader's Hedge Fund, now available on Amazon. So, kind of a rough day today. Kind of a continuation of last week. If you add Thursday and today and subtract Friday, we're off like 40 points in 2 days. That's a nice move. Yet we've still got the VIX only sitting at around 20. All right. That's actually a little light for that kind of movement, believe it or not. If we're moving 16 bucks, well, actually 16 bucks a day, you're probably looking at a VIX of about 20, probably belong around 23. So why is the VIX a little low? Well, I'm not sure how sustainable this stuff is. We've got the Euro meeting on the 28th and the 29th. That's what the buildup in volatility is, versus the long week in July. I think you're going to see some vol get priced out of that. So what's happening? It's interesting. We couldn't get the real full-blown breakout down 3 weeks ago when Greece looked like it was falling apart and Spain looked like it was falling apart. And now we've got the market starting to worry again. This is like watching, I feel they should rename Europe Erica Kane, all right, from All My Children. That's what we should call Europe, is All My Children, because that's the way they think, that's the way they operate. Let's run around like a bunch of headless chickens, and then we'll worry about the problem at the very last minute. It's like procrastinate, kick the can down the curb, and it creates this kind of constant state of flux vol. Now, eventually that's going to come to an end. Will it come to an end in a good way or a bad way is the question. I am thoroughly convinced that we're going to get a major push higher in VIX. Not this week, all right? I think we're looking at the late July timeframe again, and we could see a major, major push. Because I think that they've gonna have, when we see the VIX blow up, is when they run out of the easy options, and there are still easy options available. A Euro FDIC, a pool of bailouts. Those are the easy options. The hard option is Euro bonds. And that is going to be, we're going to have to wait for a serious market problem until that. Now, looking at today, we've got the S&Ps down about 20. We've got the VIX up about 10%. I commented on Thursday that the VIX was not keeping up with the S&Ps. Today, we're actually seeing the VIX keep up with the S&Ps, which means the market is buying into this sell-off. So, we could see a threat down to that 1,300 level. Now, do I think that we're going to end up down on the week? Who knows? Do I think the VIX is going to 27 or 30 this week? Probably not. All right. I actually think by the time we're done this week, you'll see the VIX lower than where we are now. So how do you play it? I think on these pops, you get a real opportunity to sell, move into our little strangle sell. Sell iron condors here in the August time frame, and then trade the futures inside of that. It's a great play. It works really well. And if we get a sudden collapse in volatility, it could be really, really useful. So, from the floor of the CME Group, I am Mark Sebastian, Chief Operating Officer of OptionPit.com. And this is your Mr. Top Step update.